Aloha from Maui, everyone. This is Joshua Hayes at BigWaveTrading.com coming to you with the February 12th stock market wrap-up for you to use tomorrow, February the 13th, or whenever you actually like to use it, because these analyses are usually good for weeks to months, sorry. Okay, anyway, let's go ahead and start this off with the New York Stock Exchange, and we'll go over the analysis. The NYSE long-term from January of 2008, down. Long term from July, August of 2008, intermediate term, down. Sub intermediate term, I just want to show you how we're basically going nowhere in October. I want to find the best area to show you at. Show you the overall. That'll probably be it right there. From 10/27 to February 12th, the stock market for the New York Stock Exchange has moved 1.15%. And I don't know about you, but that's about as flat can get. And whenever I go forward and randomly put it on to make it a short-term trend, like right here, look at that, negative 1.11% from 127 to now. So short-term, sub-intermediate term, lateral, market's going nowhere. That's going to be good for one reason. A period of low volatility turns into a period of wild volatility that can possibly make us a lot of money. So the New York Stock Exchange today, very bullish day, was down went down during the day, and during the last hour had a very impressive rally off the lows and closed near the highs of where it opened during the day. Opened at 52.52, closed at 52.56. So that is actually, as you can see here, let's go out with a plus so you can see it. Oh, you still can barely see it, but you can see how it closed higher than where it opened. So is that a high of day close? No, it's just a 1.60 off. Wow. Pretty amazing, though. Pretty amazing day for the New York Stock Exchange to come back. Still overall going nowhere. S&P 500 is in the exact same situation since volume doesn't change. The index looks almost the exact same. Had a very bullish day today. Look at the close, 835.19. High of day, 835.48. It was only off by 29 cents. It came that close. Or 0.29 points. It came that close to being a very, very juicy close. But this is very good. It shows that after the big day of sell-off, that final hour, it didn't close at the low of the day. Excellent. More support the day before, right after that, where the market, to me, looked like that this was now the time to crack wide open. But it didn't. And that's actually great news. And because going long is always more fun than going short. You can make most I made in the shortest amount of time is a 2,309% taser in 9 months, and the most you can make in a short is 99.99%. The best short I've had since going short is CETV, which has allowed me a 90% gain since June. So since June to now, as you can see, 90%. 1, 2, 3, 4, 5, 6, 7, 7.5 months. So they're not nearly as much fun as going long, obviously. NASDAQ. How did the NASDAQ look today? Excellent. Look at this bullish day. Look at the open. Goes a little lower during the day. And then, of course, last hour into the close. Amazing rally. Closes at 1541.71. High of the day, 1542.51. It's amazing to think that it was less than less than 1 full point off the high of day. Just 80 cents more, and you would have had a high day close. So it came very close. Still, I want to show you that from a point in October to now, is it 1027, right? Or no. Let's go back. We got to go back further for this one. As you see, 1027 to 212, 2.38%. And then actually, for the past week, as you can see, 1.76, or on 2.5 to 212, 7 or 5 full trading days, negative 0.29%. So short term, nothing. Sub-intermediate term, nothing. Long trend, intermediate term trend, down on all these markets. So they all look the same. How did the S&P 600 look today? Let's take a look at that. Very nice day. And look at the close, 236.41. Look at the high day, 236.42. Just 0.02 cents away of becoming very nice close. And that's excellent after yesterday's spinning top thing or whatever, spinning bottom. I don't even know. I got to go review my candlestick patterns because I really don't care about that. That's not important to me. The big open bodies, the tails, and the bases is what's important. Let's see how the big caps did today. The Dow Jones Industrial Average. See if it held in there. Yeah, it had a pretty good day. 7931 was the open. 7932.76 is the close. 80 cents from the open to the close, positive. So that's good. That's very, very good. Even though it's red bar, shows it was down negative 0.09%. It was down, I do believe, almost 2% today at one point. So this was another excellent close. And I got to be honest with you, if you're not happy with this action after the sell-off 2 days ago from the stimulus bill and Geithner's speech, I don't know what else you'd be happy with. I mean, if it was up a whole lot more. But even if we were up a lot, I would be saying, that looks wrong. This looks right. To hold in here to base out and then hopefully go higher, that would look right. Or to base out and break down would even be right. But the only way it would look right is if we either broke down or went sideways. Moving up immediately after a sell-off like we had on 210 would definitely not have looked right. So this is good action overall. Now let's look at the Chinese stock market so you can see how next leader looks. As you can see, short term, the trend has not been down. So short term, while the market's up 0.1% or up 1% or down 1%, China's up 11% during that time. However, it's just as lateral as we are, as we can go to August sideways. Let's just go. Okay, so it's even more there. Pick a good date where it's low. There you go. So from September 3rd to February 12th, it's moved a whopping negative 1.26%. So China's sub-intermediate term is going nowhere. Intermediate term down, long term down, but the short term uptrend is very up. And when we look at stocks like Asia and the United States of America, up 22% today and clearly building. Not a double bottom, guys, because their second leg down here in 2009 needs to be below the lows of the first leg, and it has to have lower volume on the second leg like this one does. But since it's not lower, it's not a double bottom base. Sorry, folks. It would just be a cut base. Hopefully it can build base on base from here now. But look at this. Look at the movers. So I'm sure that there's individual stocks in China moving. Now, at the same time, how is the Nikkei doing, I wonder, while China's doing well? Let's take a look. Look at that. And I want you guys to remember that if the United States is the Nikkei, that is not a good thing, because in 1990 is where it topped at, I believe, 83,000. And as you can see right here, it's 7,705 now. So it's down 90%. And if I use the tops here in 1996 to now, it's down 65%. However, look at the rally from 98 to the 2000 top. There was a 48% move in that index. From 95 to 96, there was a 36% move in that index. From 2003 to 2007, there was a 130% move in that index. Even if the United States ends up being the 1990 Japan top of the NASDAQ of 2000, let's look at the NASDAQ of 2000 now. See how it looks like the top there? If that's the same case, we're already in better position because we didn't sell off like the Nikkei did and then jump all around at first, as you notice. Notice the sell-off from 94 to 2002 to now. So it's just not as horrible now as it looked even then. So things are a little bit better. Oops. Golly. So let me go back to the NASDAQ to show you with the 2000 top what it looked like one more time. So that's what we're dealing with. And do you guys see all these big, tall red bars in 2000, 2001? See all these big, tall red bars in 2007, 2008? You know, so 2007, even as we went up the last leg, they distributed on top of the latecomers to the party, and they did it again the end of 2007, and then they did it again in 2008, and then they nailed you at the end of 2008. So charts are very important. Really quickly, oil down to 34.29. It's now below that support of 35. That's awesome. And not awesome at the same time. Low oil is great for all the my friends that drive and don't invest, but for us investors, we know that that means there's not a whole lot of growth because you need oil to grow. So it's not good that oil's this down. However, what is good? Let's look at platinum, up 0.38% today. Had an open body bar, still came well off the highs. Still open body, didn't close the low of the days. How did silver look? Silver, another bullish session, even though it was down negative 0.30, had a tail at the bottom with the top, so it's spinning around right here after the strong day it had yesterday. And then the last one I want to look at is gold. Gold was up again 0.77%, showing you the leadership. It's at 947. The highs in July are 988, and the highs in March are over 1,000, 1029. So if it can get to 988, I would assume, 1,029 is going down. So gold still looks great. And as you guys know, I've told you, when the golden cross happened, that was your signal to go very long. Here's the golden cross. Today was your day to go very long. So you're up 0.77% so far. Let's keep it that way. Anyway, I got to wrap it up because I'm out of time. This is Joshua Hayes at BigWayTrading.com. Part 2 is coming next for subscribers. And I want to let everybody know that reads me and watches this for free. I am going to stop writing my commentary like I have been. I'm going to cut it in half. I've been doing around 1,000 to 2,000 words a night, sometimes 900. You can now expect around 400 to 500. I've been told by my subscribers that I give away too much information for free, so I will respect what they wish since they pay, and I'm going to have to cut back. However, you still got these videos if you can't afford it, and that's enough to help make you money and make you survive this bear market for the next bull market that will come. Aloha.